So as we are stepping into 2024, this is the first year when the 9% corporate tax is applicable on the UAE companies. And in this video, I'm going to give you a comprehensive guide on why this 9% corporate tax has been introduced, how it is going to affect you as a business owner, and what you can do to stay compliant. I guarantee you that this would be a very valuable resource, and without any delay, let's get started. Hi, and thank you for joining me in this video. My name is Shiraz Wahid and I'm the founder of Setup Hero, where we help high-performing entrepreneurs who are making more than 20K per month reduce or potentially eliminate their taxes by moving their business and tax residency to Dubai. I had been working in the corporate consulting space in Dubai for the past 8 years, out of which 5 years I have worked for Deloitte. And at Setup Hero, I have helped more than 100 entrepreneurs escape their high-tax countries. That includes Canada, Australia, UK, and most of Europe. So if this is something that you need my help with, go to setuphero.com/call and book a one-on-one call with me, where we can review your exact situation and help you to create a plan for you to escape the high-tax country. With that being said, this is going to be a 3-part series where we will introduce you to the corporate tax, why and how is it implemented, how you can tackle it, and in the next part we will give you a comprehensive guide on what to do with the accounting, auditing, and filing requirements. And in the third part of this series, we are going to discuss the tax residency certificate, tax residency requirement, how many days you have to be in Dubai practically to benefit from the zero tax regime that we have here. So if you want to watch all 3 parts, go to setuphero.com/tax series. The link would also be in the description below. I would like to remind you that none of this is legal or tax advice. It's based on our experience of working with our clients and how we are helping them navigate their corporate tax situation. And we just put forward in front of you exactly how it is happening in real time. However, if you're looking for specific tax advice, I recommend to consult a tax lawyer or book a call with me and we will get in touch. So what I'm not going to do in this video is to open the Federal Tax Authority website and read you through the entire law, because obviously you can open that PDF and read through by yourself as well. But the objective of this video is to reflect upon my practical experience that I'm getting from working more than 100 clients in their corporate tax situations. So in the first chapter of this video, I want to touch upon the topic of why this 9% corporate tax has been introduced, because historically Dubai has been taking pride in remaining a zero tax jurisdiction, and why suddenly this change and then introducing a 9% corporate tax. So in order to understand why this 9% corporate tax has been introduced, we will look into a few elements that has resulted as the influence of getting us here. First is, of course, the OECD declaration of a global minimum tax that is mainly to geared towards large corporations, billions of dollars of corporations who are setting up offshore entities and then not paying tax. A great example of that would be Apple. In all its effect, an American company, but headquartered or mainly from their financial perspective operating out of Ireland, because the corporate tax in Ireland is 12.5%, and that allows them to escape the high tax regime of USA and then just build up piles and piles of cash. As of today, they have $100 billion of cash sitting in Ireland. So the global minimum tax of 15% is to stop those practices from global multinational companies. However, most of my clients are, small and medium-sized businesses making $1 million, $2 million to $5 or $10 million. So that is not implemented on them. So it's either 9% corporate tax in Dubai or 0%, depending on if you are within certain thresholds or not. And the second reason of introducing this 9% corporate tax is to really integrate better with the global economy. We still need to do business with the international community. We need to receive funds from USA, from Europe. We need to service clients in Europe or in Australia. And then a zero tax jurisdiction creates a sense of distrust between other jurisdictions. For example, for a really long time, Dubai has actually been on the blacklist of Portugal. And the reason was that the Portugal tax system does not accept the 0% tax system of Dubai. They say, hey, you are not paying any taxes in Dubai, so we don't consider you a tax resident in Dubai, and then bring all your tax documents here, and then you have to pay the tax in Portugal if you are living in Portugal while making money in Dubai. And then this trend would have continued with OECD, with European countries, that we would see more and more restrictions in terms of the tax laws and in terms of the banking laws. Eventually a zero tax environment from a corporate perspective, that can also promote illegal activities, illegal use of funds, illegal channeling of funds. And that results in like really creating distrust in your economy, and that can result in you not being able to send money outside of Dubai, send money inside of Dubai. And just like Singapore, Hong Kong, or London, Dubai, one of the major part of Dubai economy is the financial industry. So the flow of funds is really important for the Dubai's economy to run. And then one of the reason for this 9% corporate tax is, of course, to bring in more credibility, more transparency. Because once you put the 9% corporate tax, you have to declare what income you have made, through which sources, what are the invoices, how did the payment came in, how did you settle those payments, as opposed to what was happening before. Hey, just send $1 million in my bank account and I'll just write it off as a director's salary or something. There was no sense to how the accounting for the companies were going on. And definitely, from a business owner's perspective, it makes a lot of like ease. Okay, like I can take in whatever money I want and write it off as whatever I want, and no one is asking. So it's an advantage from a business owner's perspective, but definitely not when it comes to the economy as a whole. And so now, if you are a genuine entrepreneur, if you're making genuine money, you're not like moving money around. You have a service, you have a product, you sell those things, you create your genuine tax invoices, you keep those tax invoices in your record. And this allows you to do international business without much restrictions. As long as you're keeping your record, you're doing genuine business. This move should not affect you. And in fact, it's a good move, because then this differentiates healthy businesses with businesses who are just rolling money around. Let's say you cash out $1 million in crypto and then you don't know how to roll it around. So just move it in the company, move it out to the other company, create some invoices. Eventually it becomes a mess where the lines get blurred between using system to your advantage or getting into an illegal activity such as money laundering. So to summarize this part, the reasons why the 9% corporate tax has been introduced is the OECD global minimum tax requirements, Dubai's requirement or Dubai's need to integrate globally, create more transparency into their economy, and really be able to do businesses worldwide without much international restrictions. Now, coming to chapter 2 of this video, I want to discuss about what are the alternates, right? So I want to figure out what are the low tax jurisdictions. Remember that this is just the 9% corporate tax, and it is just on the profits. If you are still moving to Dubai, you are still enjoying the 0% personal tax residency. That is, no taxes on your salary, no taxes on your profit. If you are making investments in property, stocks, crypto, whatever dividends that you cash out from those investments, there is no personal taxation on that. And it's still quite rare to have such a jurisdiction with such liberty and freedom on the personal tax side. Now, and in this video, let's just compare the corporate tax element of the things and what are the alternates, right? So in the first world country where really there is trust in the economy, there is global business, the banking is open, and the banking is being trusted worldwide, and there are no difference of funds coming in and out. I would say Ireland at 12.5%. Multinational European companies, keep their headquarters in Ireland for that purpose. And then just another example would be Singapore at, it also has a sliding scale tax system. It can go up to 17%. Now, if you contrast that to Dubai, it's still 9%, one of the lowest, even at the maximum level. Even if you're making $10 million, the corporate tax remains 9%. There is no sliding scale over that. Now, some other alternates in Europe will be Bulgaria at 10%, Romania at 16%, and Georgia at 15%, or close to that range is what my understanding is. Now, and even if you move to one of these countries, there would be personal tax. There would be tax on your salary. There would be tax on the profits that you have taken out of the company. Any investment income, dividend income that you take out will be taxed as usual. So there's not much of a tax advantage. And then the corporate tax is coming down to 12 or 15%. So that's Europe, right? And generally, like GCC or Middle East is considered more tax liberal. So we can look around, like within the Middle East, what are the tax rates of countries nearby. So Saudi Arabia has 20% corporate tax rate, and I've worked in corporate tax in Saudi Arabia for 3 to 4 years, and I know how the inner workings of the tax system in Saudi Arabia is. They're quite strict on their corporate tax. They want their things to be very organized, and they want them to be in Arabic as well. If the tax department comes to your company, they want to see your accounting records in Arabic. They would not, at their discretion, would not accept English accounting books. So that's a bit extreme. But if you look at Kuwait and Oman, that's 15%. Qatar is at 10%. That's 1% more than Dubai. And then Bahrain is introducing the corporate tax in 2023. It would also be between 10 to 15%. And Bahrain is introducing their corporate tax. Is still in process of introduction, but that's also estimated to be between 10 to 15%. So really within GCC as well, the 9% corporate tax is still at the lowest. Now, while we are discussing the alternates of what you can do as opposed to the 9% corporate tax is, let's say, the island nations of Belize or Marshall Islands or St. Kitts and Nevis, what happens is that even though those island nations are 0% in corporate tax, their corporate structuring departments are not as user-friendly, I would say, as Dubai is. And then also the banking, it's difficult to open the bank there. You have to fly to those islands personally to get the residencies, those kinds of things. And then even if you open the bank, even if you are able to somehow get the bank without flying, what happens is that when you start doing transactions, let's say if you're someone who's making $1, $2, or $5 million, it's not easy to receive those funds into those countries' bank accounts. The banking sector is not as online or as swiftly operated as Dubai's banking system. You get everything on the app. You don't have to visit the branch. The money goes through very fast. You get multiple currency accounts in US dollar, euro, British pound, things like that. So, on paper, it can seem easy. You pay a few $1,000s to, a company set up a firm in those islands. But then very soon you realize that your ability to operate from those countries is quite limited. And then you again are in search of a new model or a new solution. So that was my input on what are the possible alternatives. I'm not saying that Dubai is the best place to be and don't consider anything else. I just want to lay on the table, if Dubai is 9%, then what are other countries doing? And for sure, later in the video, I am going to share with you a case study of a client who is making around $6 million, and we have divided their business over four jurisdictions, 4 countries, and effectively instead of 9%, they would be paying, let's say, 3 or 4% or maximum 5%. So if you are making money at that level, for sure you have to hire tax experts in multiple jurisdictions and try to create a structure that can further optimize your situation. So, I'm in no way I'm saying that, Dubai is the only place to set up and don't consider anything else. So with the alternates being covered, I want to move forward with what are the basics of the tax law that is and how it is applicable, to whom it is, and what you're going to do with it. I want to start with one of the misconceptions that is really going around in the market, that is about qualifying income or qualifying free zone. Basically, most of the videos that I've seen or the articles that I've read, they try to brush it down that, hey, if you are within the qualified income, you are still going to pay a 0% corporate tax. Well, unfortunately, it's a bit misguided because the activities that have been defined under the qualifying income status is very limited. And they're really high level activities that are very crucial to the economy of Dubai. I can name them on my fingers, and most of my clients, it won't be applicable to them. To start off with the list of activities that fall under the qualifying income and hence they are eligible for a 0% corporate tax, that would be firstly the investment industry, the funds managers, the hedge fund managers, those kinds of activities that generate a lot of investment within Dubai. That's kind of out of that qualifies for the 0% corporate tax. Then the shipping industry, because remember, Dubai is a major global shipping hub, right? So shipments can come from China, Singapore to Dubai, and from here it can go to Europe, UK. It is at the center of many shipping routes. So Dubai has to protect that status. They don't want this shipping industry to go and move somewhere else, maybe in Sri Lanka. It's also quite close. with Chinese investments getting into Sri Lankan ports and stuff. It's just a strategic decision to make sure that the shipping industry still remains at 0% corporate tax. And with that, the manufacturing industry, so if you're putting factories, warehousing, you're processing products, making stuff in Dubai, that is also, 0% corporate tax. So all of these qualifying income is really to protect the stronghold industries that Dubai has spent 3 or 4 decades developing. And obviously my clients are mostly in the online space, digital entrepreneurs, coaches, agencies, consultants making 25 to 50K or 100K per month. So, they don't fall under the shipping or the manufacturing or the financial industry. And really this video is geared towards, how my clients are going to tackle it. And this might not be applicable to everyone, especially if you are from the shipping or the investment industry. So that is my understanding of the qualifying income within the tax law. So don't be misguided by the idea that if you are opening a free zone company, you get under the qualifying income and then you don't pay any tax. So the harsh reality is that most of my clients will fall under the 9% corporate tax. And then how we can navigate is that there are 2 types of clients. One would be who are making less than 800,000 US dollars or 3 million dirhams. There is still a provision in law about the small business relief. That is, if you are making less than $800,000 or 3 million dirhams, you still qualify for a 0% corporate tax. So most of my clients that are moving to Dubai, they are at $25,000 per month or $50,000 per month. Or like $600,000 per year. The first year or the first 2 or 3 years, they would still be qualifying for the 0% corporate tax. But as soon as you bypass $1 million in annual revenues, you would be moved to the 9% corporate tax. Now, there would be some strategies that we would still be looking into your case, into your business structure, and possibly bring those down to 4 or 5%. But that's the reality, you have to kind of face it head on. That most probably once you cross the $1 million per year mark, you are going to face the 9% corporate tax. Now, how is it affecting most of my clients that I've already helped move to Dubai, or the people that I'm talking right now who are in process of moving to Dubai in the year 2024? Well, I do see that it is a little inconvenience, but I don't see a lot of negative perception from the clients here, because they say that, Shiraz, we were paying 47% from where we are coming from. And if it means for me to come down to 9%, then okay, I would be paying that tax. And if you can help us optimize that to 4 to 5%, fair enough. And if not, then I'm at peace with 9%. And it's like generally most of my clients have this idea. And really it's because when you are paying 47% for the past 2 to 3 years, probably you have paid $1 million to your government in that period. And then it comes down to, okay, you have to pay 9%, then you make peace with it, okay? So that's kind of the general perception of my clients that I've worked in the past or that I'm working right now to help them move to Dubai in 2024. So, sometimes I hear people saying, hey, don't go to Dubai anymore. It's not 0% tax, and so it's of no use anymore to you. Well, I would feel that it's not the accurate description of the changes of events, because even if you move to Dubai, you would still be having a 0% personal taxation. And that's huge. If you're taking salary of $250,000 in Dubai, that means $250,000 in your bank account. The same salary would be $125,000 no matter you are in the UK, Canada, Australia, wherever you are in Europe. Half of that will straight away go to your government. And that's not the case in Dubai. If you are making rental incomes, investment incomes, crypto incomes, all of the dividends come to your bank account with 100% cash. The government is not taking away any of that. And with the 9% corporate tax, I would say that Dubai, especially the type of clients that I work with, they're like first-time entrepreneurs making $20,000, $30,000 or $50,000 in their home country, and they have not moved out of their home country as of yet. So if this is the first time that you're moving out of your country, Dubai is still the best launchpad for you, your business, and your family. Reason being that even at 50K per month, you would still be able to claim the 0% corporate tax under the small business relief for the next 2 or 3 years. And then as you scale, you would be in a position where you can afford expensive lawyers to create a multi-jurisdiction system where you are reducing your corporate tax to 4 or 5%. That's the first thing. Other thing is that, and with that being said, I'll conclude this video. And of course, if you want my help in moving to Dubai, bringing your business, banking, family, and your personal tax residency, all in all, move to Dubai, go to setupero.com/call and book a one-on-one call with me. And then we can take it from there and see how we can best help you achieve those goals and become a tax-free resident. Thank you.